Welcome back to another episode of Tax Talk Live. We are live here on YouTube. We're live on Instagram, and we're also live on Facebook. And so, I just want you all to basically, you know, go back to what we talked about last week. We're going to be touching on something very important. I'm going to drop one game changer for you all, and I want you all to pay attention, close attention to this game changer. But before we get into this, I want to go ahead and say thank you all to each and every one of you all who've tuned in to Tax Talk Live from the very beginning. I mean, we're literally, what I'm saying, at episode number 18. And I just look back and think about, we've done this right now a little bit more than 4 months, basically 4.5 months, going into our fifth month. And without you all, we will not be able to accomplish any level of success. So thank you all, whether you're tuning in from the US, whether you're tuning in from Canada, whether you're tuning in from the UK. I think we're also having several countries in Africa that have been tuning in. Thank you all so much. We're very grateful and we appreciate it. And we want to be able to give you value when we're talking about taxes, when we're talking about money, when we're talking about personal finance and business. So let's go ahead and get right into this today. I want to talk to you all about something that's very important. And as we continue to talk about taxes, as we continue to drive information to you and knowledge, I want you all to understand that taxes are always changing. They're always evolving. There's always new regulations, new rules that are coming up. And so as we start to really look at some of the changes, because we're already 6 months past 2024. So we basically have less than 6 months left, and they've already put out a number of regulations for 2024. So I want you all to take a look at some of the changes that we're going to be looking at in 2024 and why some of these changes are very important to us. Now, when we talk about changes in 2024, you already know the IRS's website. That's where we like to, get our information from. That's where we like to bring you the latest and greatest information as well. So let's take a look at the IRS's website so that you all can see exactly what's going to be coming up in 2024. And we're going to be sharing just the latest information from the IRS's website. So when we look at this publication 505 for 2024, I want you all to just take a look at some of the key information that we're going to be passing by. And as I said, I'm going to drop one game changer here for you all. So when we talk about federal income tax, we know tax withholding, it's a pay as you go. And basically, you must pay taxes as you earn or receive income. And then there's two ways. Either it's withheld or either you pay in with an estimated tax. And that's here on the screen. And if you want to go back and take a look at this, I encourage you all to go to irs.gov/publications/P505. And I'll go ahead and drop that link in the chat so that you all will be able to go back directly and take a look at that. So you'll be able to find that right there in the chat. So what I want you all to see and what I want you all to take a look at is what are some of the changes for 2024 that's going to be filed in year 2025. So after December 31st, then you're going to start looking at filing taxes in 2025 based on 2024. So some of the changes, I just want to walk you all through them really, really quick and what's new for 2024. So as you see here, a couple of things is new. Number one, the standard deduction amount has increased. And so you need to understand that for 2024, the standard deduction amount has been increased for all filers. So for single or married filing separately, there's going to be $14,600. All right. For married filing jointly or a qualifying surviving spouse is going to be $29,200. And then for anyone that's head of household, then it's going to be $21,900. So very important here when we start to understand what's new for 2024, we see here that the standard deduction has changed. Now, there's also two other new changes that are very important. I want to highlight it here. So when we look at retirement savings contribution credit, so this is changed due to the income limits. They have been increased. So in order to claim this credit for 2024, your MAGI, MAGI, which basically stands for modified adjusted gross income, modified adjusted gross income, MAGI, must not be more than $38,250. Now, if you're married filing jointly, then that amount is going to be 76,500. Or if you're filing head of household, it's going to be $57,375. So very important. This is a huge credit that you're able to claim if you meet these income requirements. And I just want to make sure you get this. That 38,250 is for single filers, or if you're married, filing separately. All right. Now, the last but not least here is adoption credit or exclusion. And so here it talks about the maximum adoption credit or exclusion for employer provided adoption benefits. So again, these are very specific. These are employer provided adoption benefits, and they've increased to 16,800. Now, again, in order to either claim the credit or the exclusion, your MAGI, going back again to this acronym, modified adjusted gross income, must be less than $292,150. All right. And so very important, these things are new for 2024. Now, the big one I really want to touch on for you all, and this is the game changer here. And so I want to scroll back just to take a look at this, because I want you all to really get this and I want you all to understand it. So we look at the W-4, and this is so important, because I want you all to understand how your taxes are determined, how the withholding amount in your taxes are determined. All right. And so let's look at this so that we can make sure that you really understand this. And so when we look at tax withholding for 2024, the first thing that you want to make sure that you do is that you take a look at changing your W-4 form, or updating your W-4 form. And why do you want to do that? Because your W-4 typically determines the amount of taxable income. And the W-4 is useful for a number of things, right? So when there's a number of statuses that have changed, and this can be anything from your marital status to your address to anything related to your taxable withholdings, then we want you all to understand that your W-4 is going to be very important. And so making sure that you complete this W-4 and you're updating it every single year, that's going to be very important and very key for you. So that's the game changer, is making sure that your W-4 is updated. Now, there's also new tax brackets. There's also new tax brackets for 2024. And I want to make sure that you all understand as well the new tax brackets for 2024, and how those tax brackets are going to apply to you. All right. So let's go ahead and take a look at this. I want to go ahead and switch screens real quick. And I want you all to take a look at Internal Revenue Bulletin 2023-48. And so this was released late last year in November of 2023. And so this is basically giving us what those tax brackets. I'm going to scroll down through. There's a lot of information in this bulletin. I encourage you all to go and take a look at it. But I just want to come down to the tax rate tables. That's what I want to show you all, the tax rate tables, so that you can understand what you'll be looking at. And so here in section 3, adjusted items for 2024, we're going to be looking at what are the tax rates. So let's start it out with our married individuals filing joint returns and surviving spouses, right? So we see that it breaks down on one side of the table taxable income. So it talks about if your taxable income is this amount, not over 23,200, over 23,200, but less than 94.3. These are the amounts that you'd be looking at paying or your tax in the right hand side of the table. So first table is just looking at married individuals, and second table, as we scroll down, is going to be looking at heads of households. Now, I want you all to really take a look at this, and I want you all to understand what your tax liability may be just for 2024, so that you can prepare for that, so that you can prepare strategies. And this is typically what you do. So when you're not in a tax filing season, or after you've already filed your taxes, then you start tax planning and tax preparation. So this is a part of preparation. This is a part of planning. You've already kind of had 6 months of the year, January through June, to kind of see where your income is. Now you have another 6 months. You can kind of estimate where your income may fall by the end of the year based on what you did in the first 6 months. And then you can kind of do some planning, building some legal strategies that may be able to help you reduce your income. So this is where you actually spend that time getting ahead by getting information and taking that information and being able to act on that information. So first two tables, as I said, look at married filing jointly. Second one, look at heads of household. Now, one thing I want you all to take a look at as we come down to the unmarried individuals other than surviving spouse and head of household. So you start to see that, when you look at amounts, for example, we'll take over 47,100, but not over $100,525. When you start looking at amounts like that, you start to see that for 2024, you're looking at 5,000, a base amount of 5,426 plus. I want you all to get this right. Plus 22% of the excess amount over 47,150. So the tax calculation itself is a little bit different coming up for 2024. When you look at an initial base amount of 5426, plus you're going to pay 22% of the excess. So whatever you have that's in addition to 47,150, then you're going to be paying 22% on that amount plus your base amount. And so that's what you'll be subjected to in taxes. So I want to make sure you all understand that. I want to make sure you all get that. And I want to make sure you all understand how to calculate that, because it's going to be extremely important for you to actually learn that. It's going to be extremely important to make sure that you actually get that, so that you'll understand exactly what your marginal tax rates and also what your effective tax rates, which is your effective tax rate is the rate that you're actually going to be paying after deductions, after credits, whether those deductions are standard or whether those deductions are itemized. That's going to be the amount that you're going to be paying. So want to make sure that you really understand that. I want to make sure that you're up to speed on that. And I want to make sure that you basically, know how your tax professional is going to be applying that in your case. So I definitely don't want you all to get behind the curve. I want you all to stay ahead of, the curve when it comes to understanding what your taxes may be. No one should be caught off guard, or no one should be surprised when it comes to understanding what your taxes is going to be. All right. And so I wanted to go ahead and touch on that really quick. We've touched on some of the major changes. I know it was high level and kind of quickly. I'll go ahead and also drop this link to this website. So you'll also have this. I'll go ahead and drop this in the chat as well, so that you can do your homework. You can go back and research these at a time of your choice, so that you can actually see how it's going to benefit you. Now, last but not least, I want to go back. I just got a question on this. And so I want to just kind of circle back to make sure that you all really understand this. Um, when it comes to the game changer of the W-4. So let me just put this back on the screen. And so as you all see, this is coming from the IRS, right? And so determining the amount of tax that's withheld usually comes from the W-4 form. And so the IRS breaks it down and it actually tells you here. And I want to go ahead and highlight this for you real quick before we get into our question and answer session. So the IRS says the amount of income tax your employer withholds from your regular pay depends on three things. So this is the IRS saying that it depends on three things. This is information from their site. And so it's saying that first and foremost, it depends on the amount you earn in each payroll period. So that's the first of three things. The second one is that it depends on your payroll period. Now, we don't all have the same payroll period. Some can be weekly, some can be bi-weekly, some can be monthly. So different pay periods also affect how you determine the amount that's being withheld. Now, the last one is, again, the game changer. I want you all to understand. This is why the W-4 is so powerful. The W-4 determines the amount of tax withholding, and the IRS says this: the information you give your employer on the W-4, this has a huge weight in determining the amount of taxes. So this is a form that you feel that you provide to your employer. So it's in your best interest to make sure this form is filled out accurately, it's filled out completely, it has the right information in there, so that you can provide your employer the right amount of information so that they can take out the minimum amount of taxes. You should not be overtaxed. And if you're being overtaxed, the IRS is telling you the three reasons why. And one of them is based on the information that you're providing. So you got to correct that. And we have a really good video that we've already developed on how to complete the W-4. This is the game-changing piece of information. I can say it 100 times. Everyone I talk to, I always stress the importance of completing the W-4, making sure you put the right information, you fill out the right number of exemptions, you fill out whether you're taking standard deduction or you're taking itemized deductions in Section 4B. So making sure you fill this out is going to help you tremendously. So don't leave money on the table, or don't be overtaxed by not filling out a W-4 or filling it out with incorrect or improper information. So just wanted to touch on that last but definitely not least, because that's a game changer. And I want to go ahead and open it up right now for any questions and answers you all may have. We have about 2 minutes left in this episode. So I want to give you all a chance to drop any questions in our chat that you all may have, anything that you have a comment on. Even if you don't have a comment or a question, where you're tuning in from, what country are you in? Drop your country. If you're in the United States, let us know what state you may be tuning in from. So just go ahead and drop us something there in the comments so that we can know where you're tuning in from with us this morning. And while you may be queuing those questions up, again, I want to remind you all just to go ahead and take a look at those two links that we provided, because it's going to help you tremendously. And also too, during this month of July, and I want to stress this, I said this last week and I'll say it every week, during the month of July, we are offering you all a free one-on-one, absolutely free of charge, one-on-one consultation, whereas you may be able to talk to us about any personal finance issue, any issue related to tax, any issue related to money, whether it's individual or business, or any issue related to self-development, working in corporate America, living abroad, traveling abroad, whatever you may have, we're offering a free 30-minute one-on-one session to you. And I'll go ahead and drop the link there. All you have to do is put your name there, put your email so we can reach out to you. Your name, of course, so we'll know exactly who we're reaching out to you. And just a brief description of what you'd like, us to talk about. And you'll be able to set up your 30-minute session. and we'll be able to go from there to support you. So make sure you get locked in for that. I want to go ahead and drop those two in the comments right now, so you'll have that. And so we're going to give about 30 more seconds, you all, just to give you an opportunity for any questions, any comments you all may have, so that we can try and support you. We can get your questions or your comments answered. So let's go ahead and give about 30 more seconds before we wrap up this episode. All right. I don't see anyone. I don't see anyone dropping us any questions or any comments here. So I want to say thank you all again for your time. I've just dropped that link into the comments, so you should be able to see that there. If you want to reach out to us for that for that 30-minute consultation, free of charge, go ahead and do that. We'd love to hear from you. We'd love to work with you. We'd love to set you up for success. So make sure you do that before July 31st. Thank you all for tuning in from wherever you're tuning in from. Enjoy the rest of your Saturday, and we'll see you back here, same time, same place, 8 a.m. Eastern Standard Time on next Saturday. All right, you all have a great day and be blessed.